What's up, everybody? Good morning. Oh, back from the holiday. Ready to do some trading. Ooh. Okay. Hello, Warriors. What's up? What's up? Oh. Guys, look at my computer set up. I forgot to set up my stream. All the Razzmatazz fancy effects are gone. But you know it's not gone. Boom, right there. Look at that. Look at that. Ooh. My camera's flickering a little bit, but I'll have to get that fixed. We got Lawrence comments in Discord. Hold on. Where? Like 400 channels. DJ. Which comment where? We gotta get started. Market chat. Wait. The close value does not measure yesterday's short day close. You're talking about for the... Wait a minute. Right, we're talking about the close values on the redistribution zone? It's last week. Yeah. Okay. Let me get here. What's up, friends on YouTube? Hey, what's up, RJ? What's up? Hit that like button, you guys. Our friends are over in Zoom now. We've moved over. If you guys like information on how to get in touch with our Zoom calls, less delay. Full time. Let's get everything. We're at lower DD bands. I'm forgetting something. Oh. Overnights. Good morning. Go to your dynamic page here. Lines. 677. So we're situated in like a short setup, right? There's a D for the liquidity map, and then of course for S on those blue lines are the supports. Go back to S&P. 679, 649. Be a down week. Remember we talked about last week resistance, and the monthly map showed it. Monthly maps are really great. Let's see what they say today on some bear side this week. 629, 49, 79, and 29. So we're opening below the MHP on S&P as well. So kind of keep that in mind. VIX need about triple B today to be bearish today. Yep, we need to see that VIX. Realize that I'm normally not rooting for a bear market, but as you guys remember, grab some puts for the end. Monthly map show that resistance, you guys. Everyone on YouTube, friends in Zoom, can you go to YouTube hit that like button, please? Chat. Hit that thumbs up. Clock into your shift. Work's about to start. So the close should correspond to Friday's close, by the way. All right. So you notice the close value does not measure yesterday. So stock market was closed yesterday. There is no close. When you're saying close value, what are you referring to? Liquidity map. VIX need about that 1605 triple B, you guys. So that's one of the things. VIX is sitting right on the edge again today. Check everything. Get our market going. Double checking events from today, this week. Construction spending, ISM numbers coming out. Gold is always a big number for inflation, measuring the jobs market. Part of inflation, high wages and stuff. Jobs really, wow, God, table that, driving me crazy. Got the big. You guys, simmer down a little bit. Market here. Let's see what our liquidity maps say. Let's go right up to it. Let's get. Really? PLU? Wait a minute. Oh, I see what you're saying. I see what you're saying. I see what you're saying. You look at futures on ES you traded yesterday. Close open. The half gap's in the wrong. It's not. All right. Resilience number way negative. Markets trading down. All right. Look at like hedge pressure break. I usually always try to take a long off a hedge pressure if I can, if I see it. Today I don't think I see it. Markets trading down. Bulls on bottom. You know, Matt's favorite right here. We got this LU. Market's blowing back. About to break DD band as well. So keep in mind on futures. Let me get my pencil tool. Oh wait, I've been doing. That's right. Okay. I think I fixed my computer for good. So let's all like say a prayer for Matt. All right. So if we hold to here, it's that right here. Res is less than 0. So we'd be pulling back here. Matt's favorite is from here to here. Right? Wait, no, forget what I just did. That is the liquidity. Okay, never mind. Forget it. That was the old data. Now we got. I was okay. Now there's the refresh. Okay, let's take a look at it. Not Matt's favorite. This is Matt's caution day. Okay, so look at this. On the future side, I'm doing normally here you have an illiquidity pocket. That is it. That is it. That is the highest I have day today. This is a down day. Res less than 0. Okay. If we break, there is nothing here. No. QQQ. All right. So breaking 560. Normally, I'll take every chance I can to be a bull. If we do break that with some velocity to the north side, I will chase along. Other than that, I'm going to let this come down. The market could trade down for about 2 or 3 days. It does fall, so kind of keep that in mind. Liquidity maps. Flirting with the monthly hedge break. Monthly resilience on 15.9. It's liking like someone to hold, but if you break monthly resilience, it's just nothing really good. Futures friends, hit that like button. Don't forget. Everyone, YouTube, hit that like. We'll do you a solid. If you guys like the free YouTube show, all you have to do is hit that thumbs up. We'll keep giving it to you. All right. Okay, so today, nothing. Monthly hedge break is pretty bad to the downside. Let's go ahead. Monthly maps is all that matters today. Love that bear zone. If we do, oh, Daddy Bear's puts are going to be paying off, hopefully very well, and we still have that bear zone. Okay, good. Okay, say a prayer for me, you guys. Bear zone still sitting here, and bull zone down in here. We all know how this works, right? You have a bear zone right at the resistance. You have bull zone at support, which means the liquidity, volatility, big ranges over the next week. Ranges, like fast movement. If we fall, we can retrace. Bear zone. We've been bumping into that bear zone without any velocity. So your prayers. Nasdaq just broke DD bands to the downside. My QQQ puts are up 150% for the day. Oh my goodness. Well, let's just say a prayer for that one. I've got 468 puts for Friday and Wednesday. Ladies and gentlemen, I'm already up 10, 11 grand today. I made 20 something grand last week. I mean, let's just keep talking. That's my trade today, 150%. 468 puts for Wednesday, and I got $10,600 today on my options. I told you I make these big trades every once in a while. Look. Do me a favor. 30 grand in the last 3 days. Oh. Good luck. I like the brag. Brag here. No, I told you guys. I've been reading monthly maps for you guys for a month. Like, seriously. Okay, just tell me in chat really quick. Have I not been saying for a month this is what I was going to do? Not that I'm surprising anybody. Fellow gamble or something. Have I been talking about my trade for a month? Haven't I been screaming it to everybody? That bear zone is becoming more and more and more prominent. And right now, it's bear zone for 3 solid days. Benji heard it. Look at this. We bear zone now, baby. My trade's up 190%. I'm up 13 grand today. Oh, dude. Falling. Oh. Keep falling. 200%. Jesus, keep going. Well, I put this on the fucking chart here. Okay, I'm at 200% now. And 100% on... Oh, God. Oh, Jesus. Whew. Thank you, Jesus. Happy on this. All right, let's... Should we close? I take profit? No, I'm going to hold on for a minute. First to date my target. Baby, all bears on the puts. This is what I've been talking about last week. 50 grand in like... Let's, again... You know, like, anytime you start bragging about your trade, universe takes it away. Universe hates it. You said I was super bullish through the summer. I was through the summer. Zeph every day for the last 2 weeks. I've been talking about buying puts on the market. So... super bullish for the summer. And then now monthly maps 2 weeks ago. Bearish. I told everybody that I'm still super bullish. I'm going to get the retrace trade. We're going to be in bear zone, and then I might get a dip out here. I'll show you guys my prediction, and this is what I drew again. Bear with me, you guys. Let me show what I drew. I drew this about, I don't know, a month ago. We would go up to here. We'd have a very solid down week for the end of the trading month. And this is where we are. This is oh yeah. Oh dude, I was bullish all year. And then I wasn't trading this month. I was out of town most of that month. And we're going to come back right here. Okay, we're going to go up here. We're going to hover at the high. We're going to have like a really nappy week to sell, and then that'll be it. Bear with me. I'm very rarely bearish market. So. Monthly maps is a telltale sign of this. You have resistance on S&P and resistance on Q. Breaking DD band on S&P right now with a DD ratio of 0.81. So market's still bullish enough to try to want to hold that. But signs are pretty decently bad. Now with Qs, you have to understand this right here. This bear zone that popped up out of nowhere. Do you guys remember this? It was not here on Monday. Remember? On Friday. This was not here on Friday. This bear zone did not creep up like this. All peeking up here in the middle. Market likely will sell today. But yeah, whenever the maps change, Steph, I change too. Map tells me something different. I do something different. Let me post this in Discord. So basically, I just read the market and I do whatever the market says. Predictions are a dime a dozen, but the trick is the trader that when the market pivots, you got to pivot with it. You don't pivot with it, then you're not really doing your job. Okay, market chat, put up in showing prominent bear zone. This is supporting 2, 3, 4 pretty solid down days, maybe perhaps. VIX broke triple B. Ooh. You get my target is 468 on Qs. Around I get that Delta 5, I'll sell. Delta 5, Delta 6, depending if we're trading with velocity. So hopefully, like I said, 468 is where I'm trying to get a target to by Wednesday. It's still got a little bit to go. Am I cutting in and out? Hold on. It's probably my noise gate. Check, check, check. Why does it not? It's like not saving my layout for some reason. Okay. Use continuing to fall. Attrition break here. Is that better? For a Blue Chew ad. Is that better, Justin? Yeah, dude, my noise gate was being all lame today. All right, 250%. Let's go. Up 17 grand today. Let's go. 250%. Let's go. Yeah, you guys even notice. Look at this. I know the camera's flickering now, but look at it bought. Look at it made. Ooh. Like 20 grand today. Joe, you in that trade, baby? I'm telling you. We thought Joe, Joe's one of the newer folks inside here at the crew. You know, like we've been spending a lot of time studying the market before like anybody makes a decision. You made that trade with you, by the way, but you're learning, right, how we're reading the market, and you're just applying yourself based on the things you've learned, right? What's interesting to note, yeah. See a lifetime sub in the future. Well, thanks, man. See, like we're really proud of our tools and monthly maps. I mean, they just, you're reading what is in the market. It's not like it's like a technical indicator trying to read price action. You're literally seeing the risk of the market, and we've been watching that bear zone kind of deteriorate a little bit. I mean, that bull zone deteriorate a little bit, right? All right, feeling good, feeling good. Just gonna hit 468. That'll be the best. That'll be the best trade I made this year. And I did another trade like this in October of 2022 at the bottom. We made about close to about 1,100% on my JP Morgans, Apple, QQQs. I bought calls right to dip. All right, so let me. Let me go here really quick and double check everything's all set up good here. That is for September. Okay, we should just set this up here to market. Okay, cool. Just to put that here for just a little bit. Or DD on S&P. Okay, let me double check. Everything here is looking pretty snazzy. We get that bull zone or anything? No, bear zone on Qs. VIX is clean. If VIX loses triple B again, I'm just gonna close my trade with whatever profit I get. This is betting on a pretty sizable drop over the next 2 or 3 days. Oh, this is it right here. Let me show you guys my plan. Remember, I planned this for like a month. Not that I'm saying the market's collapsing, it's not. But I was looking for some good bullishness. Down in here, it's like this is like the dream bull market down here. But see, the thing is that as it kept pressing, monthly maps are starting to deteriorate on the bull side to show some bearishness here. Obviously, you're going to see some possible float on the S&P. This is going to try to hold this. We call it float. That DD ratio greater than half float typically wants to happen, but market is just, it built a really strong bear zone in tech, and last week I said it was going to be tech that did it, right? Bullet some of the tech stocks, but look, if the VIX stays above the 1605 level, it's not super hot for this market. I hate when there's something like scratching on my mouse here. When that happens, what is it? Like a chip crumb or something gets stuck in here and it like scrapes. PMI 47.9 against the 48 forecast. It's the manufacturing PMI. Five straight months down on the index, yeah. That's not that great. All right, so let's take a look at some. Let me pull this up really quick. Let's take a look at some major pivot points, just super quick. Not trading futures on DD band break today. I'm just doing my options trades. Just quickly. Oh, that's my strike price by Friday and Wednesday. The S&P, just some gap fills to the downside if there is any downside move. VIX is starting to run on this. That's it. That's my strike. That green line. We'll see. Well, this is some. I'm telling you, these playlists are interesting. These like no copyright playlists that pop up here. All right. I don't know if I always, anytime I feel like I make a little bit, I always try to take a little bit of profit. I haven't closed any of it yet. I just a little bump on DD band there. All right, let's take a look at the Liquidity map today. There's SPY. There's Qs. MHP breaks are typically pretty nasty as far as the market goes. DD band break as well. So breaking those green lines is 19,450. Just not the greatest place to execute trades in. S&P finding lower lows beyond DD band. That's interesting. Good to see. Let's take a look at some of the... Go to the scanner. Let's pull up some MHP breaks on tech stocks. Let's see what we got here. MHP breakdown. Oh, shoot, I gotta get my phone call here. All right. VIX is about to hit its first pivot. So this is the one place. Let's see which stocks. AMD, Micron. Just a couple. Let's see what Nvidia is doing. VIX is hitting its first resistance, so this is gonna be the first slowdown point of the market. This could, like I said, this could destroy potentially any short trade from here. Market is kind of collapsed inside of here. VIX has hit monthly hedge pressure resistance. Are gonna pull back. So Nasdaq stocks, like you have tech stocks, are kind of pulling back. Nvidia, BSD. BSD is a clear as day short setup. I told you guys last week it was going to be tech that was going to do it. We saw all the signs and evidence. Google bumping on monthly hedge pressure at the bottom, so there's a little bit of resistance to the downside on Goog. I'm liking it. I'm digging it still. Apple. Lower lows on the S&P continuing to pull back. S&P's got a really nasty candle there. Hedge pressure, monthly hedge pressure break on UVXY, guys. Keep in mind, that's big. Big for bear side today. And I normally don't chase shorts. I told you guys, like what I do in futures, I don't chase shorts when this happens, right? So I loaded up my puts from last week and kind of good to go on that. 468 is all I'm looking for. The S&P just broke the lower lows. Keep in mind, today you're going to watch the VIX 23.5 UVXY hedge pressure break on VIX. If you guys want me to give you something to take a look at. Now, again, I hate doing this, but it's always good practice to kind of like find patterns and as far as like how things get there. Not like patterns and like what's going to make it get there. But essentially what you're looking for. Let me see if I can find something that's useful. Something that's like anytime the market crashes pretty quick. Never really forgets. Usually when you sell off, you tend to like slowly try to retest certain levels when you sell off. Let's see what I'm looking for as far as like a go buy. Go buys are always good because it helps you frame your head around what's possible. But I mean, you like never look at the past and be like the future is going to trade like this. That's silly to do, but hold on. Let me look in keys really quick. So I kind of found like a good little pattern for y'all. So when you have a big sell-off, typically the market doesn't forget that easily. It's going to try to sell off again, and somewhere inside of here, it's going to hook its way back up. You guys remember my prediction from a while ago? Was that the market was going to trade down? I'm not certain it goes double bottoms anymore, but I do know like maybe 1 or 2 months going to likely play out because we're watching the monthly maps building this resistance in here. It's almost like a no-brainer. Exit target. I'm looking for 468 strike on Qs by Wednesday. We hit it there today with any speed. I'll close out a big chunk of it. It's roughing up close to 250% on the trade. %300. I like when I just plan it. When I plan a trade and it works. How many weeks? Hey guys, everyone that's here on YouTube, smash that like button. Let's go. How many weeks? How long was I planning? I didn't short this market at all until last Thursday, remember? How many weeks was I planning this? UVXY MHP break, everybody. Careful on that. Watch out. My target is just this green line right here. The thing is I was trying to find you guys a little go by. Let me see if I can figure out how I was going to show you all that. Again, I could be completely wrong, so don't. It was like May of 2020. I was doing this before the show to kind of look for something to show y'all. May of 2021. Where was it? I think it was May. Hold on. You'll recognize it on the weekly chart. Which week was this? Maybe it was SPY. Hold on. I was looking for something that would help you guys. Oh, no, it was in futures. That's right. That's right. I'm on my equities chart here. Futures. Okay. That's why I was like, I'm looking for something to show you, just like historically. What like kind of like market crashes when you have sudden crashes like we did. Qs. I got the DD band on here. Okay, you have to bear with me on this. Like this. Yeah, that was it. That was it. So like essentially big crash, market trades back up, retraces a little bit, keeps going. I mean, markets that crash as quickly as they did typically don't forget. They're going to make an attempt. Now, how low do you go is the question. So I usually don't try to bet that we turn around and keep collapsing. I usually try to bet to retrace the move. And so once we got that day when the S&P, right, we were trading like bull side with negative resilience. I just bought the puts just to bet that we retrace. I gave myself a week to retrace a little bit of this, at least to fill the gap. And my position goes in the money right here. So if we even retrace half the distance, it's big wins for me. So, about once a year, you can come up with a trade idea like this. This is worth thousands % if I'm right. If I'm wrong, I probably lose 10 or 20 grand, not much. I decide to bail early. I can probably still bail early in the money. Typically markets like this don't just collapse and fall. But we'll see. Likely chops around a little bit, trades up, trades up, trades up, and then decides what it wants to do when it gets there. VIX is still playing the game right now of flirting with monthly hedge pressure. So the question is, if we do retrace, like I said, fingers are crossed. How far do we go? Couple of red line opportunities in here. 18.914 is one of them. And we'll see. My camera's like a little lighter. I think I need to change my darkness a little bit. Okay, so we'll see what we end up getting. MHP breaks are pretty nasty for the week. New hour just started, and that candle is completely dropping. Okay, we have impact red line 19,260 from the other day. All right, talk about this one. Guys, you were here. Do you guys remember me playing this trade out last week? Let me go ahead and post this up in our Discord. By the way, if you guys want to join our Discord, very, 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 very good Discord that we have. One of the best. I'm a little impartial. All right, up 300%. Let's go. Fingers crossed. Oh, that's a nasty candle. I should probably take some profit on that. That way I don't lose some theta on these Wednesdays. Sell that, sell that, sell that. All right. IWM falling almost MHP. We're breaking through monthly hedge pressure again on VIX. So what we're looking at right here, market's gonna behave very strangely right here. So if VIX keeps going, this isn't good for today. Nasdaq's gonna chop around a lot. I took a little profit on that, a little drop candle there. Put a little bit of that in my pocket, just to close. I think I got pretty lucky on that, but like if the market bounces up 473, 472.5 on Qs, I'm gonna go ahead and just add to my position there. Like anytime you get a really sizable quick drop, you know, especially with puts, when volatility can possibly decay, I tend to want to make sure to get out of the way because the market can bounce around really quick. So this will just nuke your theta if it bounces around all day long. So take some profit here. They're very short dated options, so they're going to decay pretty quick on that value if we the longer stay out of the money. So I took a little profit. Like finally here I closed about a quarter of my position just to put some profit in, and then if we hit up here, I'll probably hit it longer hit it harder for Friday. My Fridays I'm not touching at all. Just my Wednesdays I took some profit on. You know, when you're up 300%, you know, you don't really need to. I need to secure the position first, because the possibility of you losing everything when it decays, it strikes out of the money on expiration. You don't want to fully be fully at risk. So like once I'm in the money, I'm gonna feel a little safer. But being like close to the money, near the money is not good for theta, especially on short-term options. So like if we're sitting 468 is my target, we're getting pretty close on Qs. And again, I've got Fridays just to ride. My Fridays gonna be my big winners if it keeps going. I don't have far to go either. Just took a little profit, just a tiny little bit. But VIX is exploding. I'm gonna hold on to this for the rest of the day. I think we're good. Oh, I love trades like this. VIX breaking MHP. Let's go. There's more running. S&P finding lower lows even now. Continuing to fall. Make sure I got all my gaps marked on the S&P. When you have days like this, you gotta be very careful monitoring volatility. So VIX monthly hedge pusher break. This is the big one, right? That's a banger trade. Oh, thank you. Thank you, thank you. We'll see if it keeps going. Just we'll see. We'll report at the end of the day. Consumer spending went down. It's about time. Let's take a look. Oh, yeah, let's take a look at the ISM numbers. Just manufacturing prices. 47, 247.5. Then consumer spending. Construction spending? You mean? Forecast is down. So so good construction spending is coming down. It's good. VIX MHP break, right? Hugely irrational. We talk about irrational days, we trade small. Today, like, if you guys have been, who here has been doing the Zoom calls, by the way? Everybody that's doing a Zoom calls, can you do me a favor? Can you go to YouTube? Do me a favor. Everybody go to the YouTube show really quick. Go there, leave a comment, or like go talk and chat and tell people this, with the Zoom calls, or like give people like maybe like a little review of your own of what you think about the Zoom calls. Only $20 a month. We're trying to raise a little money to hire more people. Everybody in YouTube, go there and check it out. But anybody in the Zoom, if you guys can do me a favor, go over to the YouTube and let them know what the Zoom calls are like. Are you guys are y'all enjoying the Zoom calls? What I want to know. Whole different setup. The daily Zooms in the afternoon. Like strictly detailed trade plans, risk management plans. We have a brand new liquidity map diagram, which is what we did for that. Essentially, I talk about how I interpret the liquidity map. So all you guys are like Rocket Scooter members or Rocket Scooter fans. You guys have the tools, but then like me as a coach interpreting the tools, I have a new version of this that I'm giving out to folks to do that. It's $1 a day. And what we're doing here is I write my position sizes and my qualifications. Do I trade small, medium, or large on each one of these particular legs? And then why? What conditions let me trade them? So today, Zoom folks, right, you guys understand, because we're in Zoom right now and YouTube at the same time. Right? I'm not trading at all today because I don't chase a short. You guys remember that from the Zoom calls? I'm not in any kind of day trade. You guys got to do it. Y'all got to join the crew. Y'all know me. Almost never really trade. MHP breaks to the downside. If I get the justification, I will. If it breaks and then retests, I usually trade small on it. Oh, y'all are so sweet. Yeah, they're not lying. Like we moved over there because like people like it better, and I think that's kind of like the way to think about it. Zoom is a little bit better. Hey, did you guys have a fun holiday? Y'all do anything cool? I did nothing cool. I sat here and worked. Played a little bit of the Call of Duty 6 beta. Already tired of it. Any of you Call of Duty fans in here? I never played Call of Duty before in my life. Not lying. I'm a Battlefield guy instead of Call of Duty. But all right, let me see if I can. VIX is still going. Let's find some gaps here. Yeah, we'd love for you guys to check it out. Go to the like I said, I made a bet with everybody. I told you guys, if you went to... I made a bet with everybody. If you were a membership here... I told people, if you were in this product here, our monthly membership, and I had 468 QQQ by Wednesday, I'll give all of those folks an upgrade, $1,000 for lifetime, which is like $3,000 off. I'm making a bet. If my trade takes off, and you guys have got this, you have to sign up. I said you had to sign up by yesterday. I'll give it one more day today. So look, you even have evidence. We might even get there. See that link I posted? $67 the first month. It gets everything, including the Zoom call. Do that. If I hit 468, you will be given a discount, $1,000 for a lifetime. I said that you had till yesterday to sign up. Whatever. Sunday. So we're playing a bet here. Zoom calls are all about position management. Like it's a huge part of why traders don't do so hot is position and risk management. Mostly position management. You're betting too big, you're betting too often. That's it. That's the reason you fail. Less is more. Less is absolutely more. Planning and planning and planning and waiting to strike when everything lines up when you have money in your pocket. Don't whittle your money away by over trading. You want money in your pockets so you can play your big hands when you get them. That's if you're in $20 for Zoom coaching. No, you have to be in the full package. Now, if you were already in Pro Plus the Zoom call, like you bought both of them, then you're good. What we're doing in these courses is we're teaching you guys how to we're teaching you guys position management. Like my results didn't imply your results, but these are my puts right now. We teach you guys position risk management. So that's the whole point of it. It's different than what we do here. Vikram. Big position, Travis. Yeah. Too big, too often, too much, right? So the new liquidity map, if you guys sign up, I put the link in there. Everyone, even if you're in legacy, cancel your legacy and move your sign up to that. The liquidity map that I'm making, I already made it, has handwriting on each one of these legs that justify which ones I take, which ones I don't take, how big the ones I take are when I take them. So I justified why I made the trade that I did. We'll talk about that in the Zoom call today. $350. Come on, baby. Let's hit it. 468. That's all I need to touch. 468. That was my strike. Oh, here, Denny. Let me give you the link. Hold on. So, like I said, if you're in the monthly membership, I'll give you guys $1,000 lifetime. If I hit my strike by Wednesday. That's the product link. Only if you're there. You have to be there, that exact membership on the marketplace. VIX is continuing to press. IWM just broke MHP right now. 216.5. This is good. This is a really good setup. Let me explain to you guys what we did, and I'll tell you how monthly maps work. This is the whole reason. And I don't understand why, I don't know. There are people like, yeah, I got your stuff. I just didn't use it that much. I like the cancel service. I have some people say that. I'm like, why would you? I guess a lot of times people don't trade a lot, or they don't want to learn something. But to me, if I'm trading, I need as much valuable information as I can for myself. I think what's a deterrent for many people is they don't like to go spend time learning anything new. Trust me, I'm the same way. My ADHD is... So right here on project. Let me show you guys something real quick. So if you go to the fun area, which is the learning area, start training here. You got a thing called cheat sheets. It's great to see the YouTube show still have 60, 70, 80 people in it, and we still have 100 something people in our Zoom, which is awesome. Our stream is growing bigger every single day. Monthly map is what we're looking at. Let me make this smaller so you had to analyze this. We do this every day. This is like literally it. Yes, everyone pay attention. We're going to do this. So Ivan, what we're telling people to do is to cancel your legacy membership and just subscribe to the new platform. It'll save you a whole bunch of time waiting for us to migrate you guys. There's a lot that's going into it. The more that you guys do that, the easier it is for us to get you on there, because we're migrating people one at a time. So if you just migrate yourself, it makes it a whole lot easier. So that new membership is 67 for the first month, and then 111 for each month after, and comes with the Zoom calls. Okay. So monthly maps, right? You're looking for a couple things. Number one is, where's the bull side? Where's the bear side? Right now, we're trading in QQQ, completely bear side. These light grays are the bear side. Now we're going to see the shape and change of this side over time. This is the bull side over time. This is the bear side over time, right? It's shaped its way that way. When the bull side is sloping up, bulls are exiting positions, bears are shorting more. It's a short setup. We saw this building last week. We gave many classes on this. That monthly maps look into the future. This is where risk is in the future. Okay, you can't predict the stock market. We always say you can't predict the stock market. You can just read the risk of the stock market. And that's what we do better than anyone else, because we look at the positions. And that's it. We don't look at price, we look at positions. And you can see that there is like this bear zone that's just sitting right here all the way through October the 9th. Right here. See that? I'm just tracing it. The market's going to have a hard time rallying through this, through October, which is why I drew something like this on my bigger prediction. And then somewhere in here, likely on those supports, is when we're going to rally. Middle of October. So I'm not buying the dip yet for big rally. I'm waiting for October for it to happen. You'll see how that works? Between now and October, we've just got resistance. And when you have bear zone above bull zone, a couple extra things happen. The market's very illiquid. So illiquid markets, the size of the range can get bigger. And we talked about this. Your daily range can get really big. Like this is your average daily range in your illiquidity pocket right here. So between now and a week from now, you can have 20-point days in QQQ. You can start having big red candles again. And that's what I'm betting on. Illiquidity pockets on monthly maps are bad. Illiquidity or volatility pocket is when bear zone is above bull zone. And you don't see that often. That's why I took a bet. Typically, when they're this way, and again, this is some free knowledge. You guys hit that like button. Come back every day. So what liquidity map, what monthly maps do is we have an algorithm that looks into the options order flow. We can extract liquidity provider positions. They're betting against both of us. So this is the spread of the house, right? The casinos bet, the market makers bet. And this is how the risk is distributed. The light gray is bear, dark gray is bull. Now over time, the bull side is getting stronger by deepening, the bear side is getting weaker. So it's a greater bull market over time. Somewhere between now and October, we're likely pivoting around. But in QQQ, there's a very strong resistance that has been built. And we saw it forming all last couple of weeks. And as it was forming, I ended up drawing my prediction, which I did. And again, I'm up on that. I'm bad. I don't just talk about the market. I make bets on it. I made my prediction about a month ago. Or actually, next time a month ago. Don't let me lie to you. That was on 3 weeks ago. About 3 weeks ago. 2-3 weeks ago. And we would double top and then start to see some volatility. We saw that resistance starting to speckle its way in. Now, I'm not too convinced that this is what happens in December. Election could just be very bullish, but at least this part of it is where I'm convinced so far. That we just have a couple of months of having a hard time breaking out the highs. And so with that, let me detail what the different pieces of this are. When you have bull side above bear side, just like this, the top of the bull, the top of the bear and the bottom of the bull are always your resistance, your pivots. When they're, and this is called a liquidity pocket, liquid. When it's the other way around, we call them volatility pockets or illiquidity pocket, the opposite, IP. The same applies. The top of the bear zone and the bottom of the bull zone are your pivots as well. Notice that with them being distributed the same way, just upside down, the distance between them is much larger. This is your average daily range on those days. So when you start to see volatility pockets form like here, bear side above bull side, you can make a fairly accurate prediction that the VIX is going to go fucking crazy. I'm up 300% on that bet, and it just started, and we'll see if it makes any more. But the issue that you can see is that the options told you weeks ago that volatility was imminent and possible. And now we're just watching it play out. Does everybody see this? Y'all watch all the streams the last couple of weeks where I talked about that the VIX was about to explode again. And honestly, like I said, this is what we teach you guys in all of our courses that we do and all of our daily Zoom calls. We talk about this. I've been talking about this trade for weeks, right? So again, volatility doesn't sustain, but we were talking about how this would likely push. There's impact red line on Qs. This is the place right here. 19260 on NQ. Let's get our... And I hate being at the money. That's the problem. At the money, your data burns the highest on your options. So, like, I hate, like, literally sitting here at 469. We need to hit 468 and keep going, or else I'll probably take profit at least on my Wednesdays. There's one risk interval drop, 2 risk interval drop today from the event. That'll be right at 468. Lower DD band on Russell, so this is likely a bounce point for the market. Let me just take a little bit of profit here. Why not? Sell a little bit of that. No, I'm not going to sell yet. I'm going to wait. So the idea that there's problems brewing, you know, I very rarely do I bet bearish. Well, we got all the signs lined up. So this is what our monthly maps do. It's just one button click on the platform. It shows you monthly map on any stock, anything. So the daily ranges were really small, and then they start to get bigger. And then they start to get bigger. So as you see, there's an amplification of the range. Volatility is going up for the next week. Till September 10th. S&P resilience just went positive. Hold on, wait, no, never mind. Don't listen to me. Don't listen to me. Oh, wait, it is. It is ticking positive. How about that? Okay, let me... Yeah. Let's look at S&P. To give you these little cheat sheets on our Discord, like I said, if you guys check it out, I'll teach you how to do all this. Even the S&P, this is what NASDAQ looked like before it started building that really strong resistance right here. 1 second. Okay. NASDAQ started doing this about 2 weeks ago as well. You see how it's starting to speckle in just a little bit of bear zone? It's starting to build. So the volatility on the S&P, the daily ranges are starting to get bigger, and then bigger, and then somewhere around here, look at this, it gets really big. All the way to September 10th. So the S&P has a potential widening of its range. Now again, we take it both ways. We don't just bet that volatility means downside. But this distance, the average daily range, as you see, is getting slightly bigger. And even when the market's liquid, you look at the other side, the space between the two, when the bear side is above the bull side. So as you see, if I were to translate these up to there, you'll see that the average range of the S&P is getting bigger over the next like 7 to 8 trading days. Okay, like medium size, bigger, 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 bigger. So volatility is expected to climb, and so that's the bet I made. The initiator of the bet was pretty easy. I don't know if we have the, we don't have the, but basically if you guys remember how resilience works, and Friday's chat was all about resilience. When this white line right here is below 0, then this is your resistance. You can draw a line from here to here, like this is resistance. Like this morning at the beginning of the stream, we're at high of day. So what happened was QQQ was trading on, I think Wednesday or Thursday. Thursday. No, it was Wednesday. QQQ was like trading like this, with negative resilience. So part of that was I jumped in on those 468 puts right then and there to do that. And within like an hour or two, the market started selling. That is a cool technique, and I love teaching this one. We have a gap fill predictor that we created that exploits the arbitrage and the SPY. And I'll show you guys this. By the way, it's your first time here, feel free to introduce yourself. Say hello. I love all my new friends here in chat. I'm engineer turned trader. Everything we're using here, we invented. I created everything, including the trading platform, all on my own. We hired a team of people to help build it further. It was this one right here. Trading above the box with negative resilience. Instead of trying to day trade it down, I just bought puts. And then the market completely collapsed that day. I mean, it was just like such a beautiful lineup. I got so lucky too. And that's like one of the things is that I just got lucky. My trade took off. You know, trading, there's skill, but also, you know, I like to say there's a lot of luck in it too. 468, baby. We hit it. Love it. Okay, I'm gonna capitalize on that gamma really quick, but hold on, let's go here. 468, where gamma's maximized. Let's see if I get a little bit of velocity below it. I need to close the Wednesdays out and then move the position to Friday, because you don't want to hover at the money for too long. Let's see if we sell off today. We'll just see. It was this day right here. What I drew on the screen was this right here. And then like right up in here, we bumped against the yellow line and I started buying those puts. It's just trickle, trickle, trickle. And like the flashcards, you get these in our membership that we give these to you. They show you the probability or the probabilistic move. Okay, let me clear all the drawings. Let me close this out. We'll take it 350%. There's that 468. What drives those yellow lines? It is the risk interval, but the margin buffer limit. It's in that same family of indicators in futures. It's a futures thing. You're exploiting actually CME's own program that sets the margin requirements for clearing firms. So like we exploited that, and we found usable pivots from CME's own equation. You want to find the guy that's going to read every patent they ever came out with? Well, thank you very much. That's me. We're going to use CME patents to create trade ideas. You know, put an engineer in front of a mathematical document. I'll figure out all the pieces of it. All right. Let's close out a little bit more of that. $25K today. I think it's a total of like 50 over the last 2-3 days. As my newer ones strike at the money, I'm switching. I'm switching. I'm closing out some of the newer ones. I get some big velocity. I'm gonna cut it. I'm gonna cut out. Here comes free lifetime for everyone. Not free, $1,000 lifetime. But only if you bought that membership before it happened. Now, you guys have I'm gonna give you 30 minutes to sign up for it, and then we're cutting it off. Now it already hit, it's guaranteed. So if you didn't sign up for it, you don't qualify. Oh boy, I love days like this. Now again, in October of 2022, let me share with you guys something really quick. I use monthly maps. You guys might, if y'all like this isn't the first time that I've done something like this. Every couple years when I find the perfect trade, I do the perfect trade. And I love to post history on Twitter so I can come back and be like, told you so, like I did it. And not like, you know. And then what I do is I put them on Twitter. Hold on. I put them on Twitter and I call them out when I do them. And like, just, I'll have to continue to do this. And I need to update this, but like, I make my big calls. Like in 2021, we're going to S&P 6,000 in 4 years. That's now, we're almost there. You know, at the top, I called for a short-term correction, literally on that candle. There's the tweet. Down here, I said we're going to rally for 2 months. Monthly maps. I traded that. Hit the bottom. I said, this is the bottom for the year. This is the bottom. Market's going to rally from here. And then the middle, I said the recession is over. I said we're rallying through October and they're continuing to rally. Like, I make big calls. This right here was a 6-figure trade. Right off that. It's monthly maps. It's all I use. It's all I use. And it's all I use for this one. This will be a 6-figure trade. And then in October, when it pivots around, I'm going to get back to the long side. And I'm going to turn to a 7-figure trade. Stick with me. I'm going to make $1 million bucks. If I get lucky, off of this tiny little trade I started last week, I'm going to flip it long at the right timing, the right expiration. And if I get lucky 2 times in a row, this 100K profit, $1 million profit. Let's see if I can get it. But I call out my positions on Twitter, and you can go read the tweets. There's all the dates. There's the dates. There's the dates. On exactly these candles and stuff, I mark it. Okay. So I'm using just monthly maps. This is the tool. It comes with the platform. That's all I do. Now again, fingers crossed. On those 468s, let me take a look at let me look at some of the Greeks here. Gamma. Put the chart over here, chart over here. The Theta is really strong. The options are worth right now 286, and that Theta is 159. So if you think about it, because your Theta is the highest at the money, So a $1.60 on a 280 option is how much you lose if it doesn't stay in the money at the day. And so Theta burns the fastest at the money. Teach you guys a little bit something at the Greeks really quick. Hold on, it's the wrong one. So Greeks will let you know what you're at risk, okay? So this is my position right here. This is how much it's worth, okay? Theta is effectively how much it will lose per day if it's out in general. If it's in the money, out of the money, or in the money, you can see that Theta, the amount it loses per day, is the highest at the money. So the longer you hover at your strike, especially on short-dated options that expire on Wednesday, this 296 will lose $1.59 tomorrow. So I got to close a lot of it out today. If it's hovering at 468, I got to get out of the whole position today. Do we understand? I'm going to lose more than half of that position by tomorrow just sitting there. Now, the delta and gamma talk about the speed at which this value goes up to offset that theta. But losing $1.50 is not the best, right? Do we all understand that? Now, let's just talk about we just had another move to the downside. Let me show you what you want to expect. Now those 468s are worth $3. Just in a couple of seconds I've been talking, it went up from like 280 or whatever to $3 now. It's offsetting some of that theta loss, but does everybody see that if you were to draw a bell curve like this, the theta loss, the amount you lose is the highest exactly at the money. So if your option is sitting at that strike and it expires right now, you want to close it all out. Even waiting a whole, unless it's got velocity to keep going, and you get some more move as that delta is going to go up for every point the underlying goes up or down, depending on your betting. But you never want to hover at the money, especially on these options expire on Wednesday. If we're not below 468, I'm going to lose everything. Even if we're at 468, I'm going to lose most by tomorrow. Everyone thumbs up in chat. Do you understand that? YouTube? Is there a promo for lifetime? You have to, yeah, if you signed up for this, which means you had to have signed up for this by the deadline, this, you get the deal. Everybody understand? So I can either hold on and bet that we continue to get some good delta moves, but at the money, the gamma is the highest. So the minute you break through your strike, like if markets are falling and I break through my strike really quick, I close out everything. I close it out. Because you get that velocity and then it'll probably bounce back and hover at your strike, and then you get 2 days till they expire. That theta is going to bleed you out $1.60 a day, and tomorrow it's going to be even more. So this has to hit 468 by tomorrow or I lose everything on the trade, right? So we're like, you know, getting there. I'll go here really quick. I need to get there, right? That's my... You need a hoodie. What's the best deal today? Frog Dog, you got to do that one. Click that button right there. If you sign up for that, I told you guys I'd give the folks a special for the lifetime. Why is QQQ not updating? What's going on with my data here? Can't even today. I'll take it 400%. So again, these are short dated options. Why? Come on now. 30K for today. I made like about 20 next week. So now we're kind of sitting there. We're pretty. That theta just went up to 160, right? It's still pretty high. I need to get a quick little zap and I'll close out on some high volume. I'll close out fully. Once I hit my strike, I call it. So I'll take 400% on a trade. I'm not anti that. Let's get one more little zip. I mean, I'm just talking. I want some crazy. I mean, some crazy. And if you guys like today, the Zoom call is going to focus really heavily on the monthly map, so you guys won't be left out. I promise. I'm going to make sure you understand monthly maps more than anything. Oh, all right. So your gamma is the highest at the money. So the minute you start to accelerate, if you accelerate at the money, your delta is going to go way up. And the minute my delta goes way up, because the gamma is the rate of delta and delta is the rate of change of the option. You see that option spikes up in value, I'm going to cap the whole thing. If we just get some quick red candles, I don't know why this keeps. I'm about to close it, yeah. Next big red candle I get, I'm gonna close the whole thing. I got Fridays as well for 468, and I'm letting those guys ride. The capitulation volume, yeah, Joe, and I'm the nuke. Just the Wednesdays because the theta is too high, right? I'm just gonna nuke them all as soon as I get that volume. Right. Let me just do the. $30K for today. Yep, let's get it. That volume. Ooh, I forget how to take the screenshot of the positions in Weeble. I'm such a noob, dude. All right. I'm trying to get a screenshot. I forgot how to do the screenshot in Weeble where it's like, this is your position. All right. Close it out. I exit out 400%. I made $32,000 today. I didn't get the capitulation volume, but it did that on Russell. So I look like it really got that little move there. Oh, and I know you guys want to see that's funny. I do this funny shit. I know I have like a really terrible sense of humor. But like y'all if you gotta follow me on Twitter, I'm subtle, okay? I'm really subtle about how I do this. Look. This is it. I'm eating brunch yesterday, and then I just say like QQQ, but like I don't know if you can stand my brand of comedy. Here's my brunch puts. Here's wine, champagne. Here we go. like I said, it's not a bad idea. I'm gonna turn this into $1 million trade when I'm done with it all. All right, let's have some fun with it. Brunch puts taken off. I like doing pretty decent. Like when I get a good setup, I like to take it heavy. Close the Wednesdays 400%. We're not, dude, and Joe, here's the thing, we're not getting capitulation volume on Qs. It's just slowly trading down. Like, it's just, the volatility is just starting to pick up like crazy. Wonder how I should bet this. Should I close up my 468s as well? For Friday and just redo them on a pop? Well, let me pull up my Thinkorswim here. You know, I always feel like I get too greedy sometimes. I do, like, want to let the day play out, though. There is a little capitulation candle there. How do you, like, you guys remember in Weeble where you can take the picture, like that full screen that shows the percent of your trade? Do y'all remember how to do that? Like the export. Oh, wait, here it is. Here it is. Oh, I'm an idiot. All right, there's a capitulation candle in Qs. Came through. All right, let's take a look at it. I know. The SAM roll is the, or SOM, however you say it. It's been something that's in the back of a lot of people's minds. Lock-in Pro Plus. Oh, nice. Love you guys. All right, so we're going to do, like today we'll talk about monthly maps. I'm going to go through the full detailed picture of it for today. In the meantime, I'm going to go to the bathroom real quick. Hey, did you guys notice? Did y'all like the... I know it's flickery. I need to change my camera settings, but check it out. Did y'all notice the new thing? Finally got it made. How cool is that? Be right back. Now, the trick is when you're trading options, you never, especially when you're short and puts, don't ever hold for 1, 2, 3, 4 red days in a row. Why? Everybody from the class, type it. Let me know what you think. Hey, what's up, Gil? If you close your legacy account, will you lose your subscription fee? So the new one is this, basically. It's $67 a month for your first month. And then $111 each other. And that comes with the additional Zoom call. We're trying to raise money to hire more developers. So we'd love for you to move your account over there. It's probably comparable So what you've been doing. So Gil, everyone's adding $20 to their membership. So if you have a legacy price plus 20 and it's in the ballpark of what I just typed, then you're better off just moving over because you'll lock that in on the new site. So trying to like do more work to raise money to hire more developers. That's kind of my whole thing. You know, we build stuff here. This whole platform, everything that we have, we built homegrown. Like we didn't go out there and get, you know, seed money, venture capital money. We built this all on our own. If you switch over, Gil, I'll refund you. The old one. Yeah, because of candle count, right? 50-50 candles. So if you get a really nice, strong red day, always close out your puts. I don't care what it is. I don't care if they're puts for like 3 or 4 weeks out. Like, if here is where I bought my trade here, and this is like daily, and market's like going up and up and up and up, and I have puts for like right there. The single day that I get that just is an excursion day that blows through and makes my puts, I usually close out all or most. It's rare to have 3 red candles or 2 or 3 red candles in a row. We might get that, but I'll wake up tomorrow and start a new trade. So if I'm betting that by, you know, Friday we hit this level and I hit it on Tuesday, it's time to take profit on that, right? Because it's rare that you're gonna have red day. And again, I could be making tens of thousands % on a put day, but I don't like doing that. On bull markets, though, since there's like a little bit of a lack of volatility, I don't get that bounce around, because if you're just hovering around and bouncing around your level, you're going to drain your position on Theta, especially if you're hovering at the money. Thank God we just blasted down to 466, which is great. I'm very in the money right now. And my Theta, while it went down just a little bit, I closed out the position. So the Theta went down from 160 to 150. See, even 20 points in the money, I'm still going to lose $1.50 by tomorrow. So to be very careful to bet that the market continues to go. So basically a short trade on puts is like I'm betting for the market to fall, and the day that it does, I cash out the 400%. If I hold, there's a very small probability that it's red day again. So I don't hold the position that expires Wednesday. I got lucky. So what I did was I took some of those profits and bought the same strike for Friday at the money where the gamma was the most expensive. So right when we hit 468, what I did was I took profit on some of those Wednesdays. I immediately bought at the money for Friday to bet that we continue to sell by Friday. So I can afford, I just bought a little bit. I don't have a lot, but just to bet that I got plenty of cash to wiggle into another day, push it out further. So what I do is when I get the trade, if I still believe the market's selling, I push it out further, as you guys all know, because of candle count. Candle count is one of the things I will cover in today's Zoom call again, but we covered that last time. Okay, I'm going to draw something. When markets sell off, they don't just fall. Very rarely are you going to get 2 or 3 red days in a row where the market just falls. You typically have a lot of overlapping, and I'll just go through it right now. You're very rarely going to see, 3 red days in a row where the market just collapses on itself. It's just the rarest thing ever. So, and when shorting markets, you don't bet on that. Even in bear markets, like to get even days that are red, they typically overlap. You see how there's overlapping on the candles? So futures will likely trade up overnight for me to repeat the put trade tomorrow, and trade up overnight to repeat the put trade again. It's rare that you get the red day with lower lows each time. So when you get a big blowout win on shorting the market when it collapses, you always tell yourself, and we do the candle count game, which is a fun game to play. If you look at the last recession we had, or any recession, count how many 3-day moves you have with lower lows on red candles on a daily chart every day without retracement. This retrace, that retrace, that retrace. Think retracement is I'm going to buy puts again today. So let me take profit at the bottom, get back in at the top. So when markets are falling, I like to day trade. Get in, strike, get out. Get in when it pops, strike, get out. Because every other day, green, red, green, red, green, red, 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 green, red, green, 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 red, green, red, green, red, green. It's like fucking Christmas over here. Okay. So you never want to bet for that. The thing that your brain goes, aha, I'm going to make millions of dollars in trade. That is the goal. That is the golden lottery ticket. If you hold puts and 3 days, they go 1,500% in the money, you got lucky. The one time it does that in the entire recession. Does everybody understand that even really strong selling days, futures tend to retrace almost half of it overnight, and you wake up the next day and do it again? So the minute the volatility peaks up middle towards end of the day, you kind of want to start thinking about, I'm going to cash out. And then tomorrow, I'm going to check the plan again. Any bump up to resistance, I'll jump right back into puts. So the idea that you usually want to have on a day like this, like if I get my blowout 3 days, I'm great. I got Friday puts. I took my profits from today. I executed like a calendar play. I pushed out a little heavier. Got a gap to fill right here on Qs, which would be great. We see the opposite position of monthly maps and get ready for longs. And look at dealer positioning. Yeah, we look at a lot. I'll go over like when I pivot this trade to go the other way. So what I'm going to do is today, if I get the big blowout day today, and these 468s are in the money, again, the ones for Friday now, the ones I still have in my pocket, the Theta is only about 82 cents. So like I said, typically on red days, I'll close out at the end of the day. 82 cents is not that bad. Better than 180 bucks, right? Or 80 bucks instead of 180. So now I'm just holding. I still have 468s for Friday. I'll close all of them out by the end of the day today. Tomorrow, any retracement, I'll get in. If the market continues to fall tomorrow, I'll wake up tomorrow and see that, and I'll continue to trade. Ideally, inside of here, somewhere over the next week or two, probably by the 10th, I'm looking to relong the market to retrace some of this. It'll be the same trade in reverse, and we'll talk about that. This has just been lovely. Let me go ahead and... I'm not complaining about this one. All right, I do like that volatility. Okay, you know what I'm gonna do? I'm gonna close out everything. I just closed everything. Done. I'm done. Close. I'm out. I'm out. Even the Fridays. I'm 2 points. Oh God. Okay, good. I just literally right when we got this. Or I could just push, turn, I'm out. Okay. I don't hate it. I hate it. How do I show my P&L on Weeble? When I use Weeble like once every couple of months. Okay. I'll short it again tomorrow. It continues to play out. Brunch puts. That was fun. You got the monthly. Cool. Where do we watch for the 1K promo Discord? Come to the Zoom call today. We'll talk to everybody about it. You had to have gotten the monthly membership by the exit. So we'll play this game again. If you didn't get in time, we'll play another game. Tomorrow, I'll announce a new target. And then if you're a membership, you get in late, we'll do the same game but for another day. I'll play that. So monthly membership, I'll give you a discount for lifetime. Hold on, let me do this. What am I trying to do right now? That was a banger trade, you guys. Again, tomorrow, like if whatever it does today, I'm totally cool. Tomorrow, I'm gonna try again for another thing. I just hate, like I'm telling you, I hate being short the market when there's volatility. Because the volatility can collapse at any given time. This thing can wave way back up. Hell, if it's 470 today, I'd be glad to jump right back on the 468s on Friday. To really push it. But we know that, you know, basically red days like to close strong in red. So I'm gonna let this retrace a little bit before I do anything. Typically in days like this, like that was a pretty one hell of a ride. Back up inside of here. I'll probably try some more. I might do the Russell this time. Actually, no. What if I do S&P? Do anybody playing the new Call of Duty, the beta? Black Ops 6? Any Call of Duty fans here? I don't play a lot of Call of Duty, actually. I never played Call of Duty before until this one. I did a little bit this weekend just for fun. I ain't bad, by the way. I'm not a bad gamer either. I used to game a lot when I was younger. I used to be competitive. I'd go to MLGs and compete in Halo when I was in college. These days I just casually dick around. I play Apex Legends. From time to time. Okay. So again, when it comes to puts, once you get your blowout, you go 2 or 3 strikes in the money, close out like every single time. Because puts, you don't, market's just it's so rare for the market to fall. It's just rare. Once you get your big bet, everybody right now is thinking, oh man, puts, let's do this, right? And I'm already out. I'm done on the sidelines. So it's gonna be like, you know, a little bit of time for the market to digest some of this volatility. The goal is to see it before anyone else sees it and then make your money. I closed out right here. Like I literally closed out right here, and I close out at the bottom. Ow! I love it. Thank you. As I'm sitting right here, as I'm closing out, I just there. All right. Hit 2 strikes in the money. I'm risking at this point. This is mostly. Let me show you. This is mostly where my I'm always in a good. I'm in a good mood when not because I make money. That's not the. It's because I called it, right. When you call it and you get it right, trading's luck. It's planning, but it's luck. And betting is correct. I bet sizably. I didn't bet too big. I didn't put much on it. 20 something. Made 400% on 20K. So, bad. That's on Weeble. I showed y'all the picture. And these trades line up. I tell everybody. It's always the quiet people. Like, I'm not out there blasting on social media, on TikTok, on Instagram. I'm the quiet sleeper hit on the side. Because I'm not flashy about it. But while these kids are out there paper trading, I'm planning. So, You get lucky sometimes. But I closed out right there. I'm out. Fully exited. The whole thing. All of it. I'm going to get back in today. Friday. Same strike. What's up, Dan? Hey, thanks, buddy. It's part of the reason when you get a nice big blowout day on Joe says, awesome job. Love the complete breakdown step by step with confidence and trust. Well, not just the system or parts of it, but like confidence in myself mostly. Like, again, luck is part of it. Obviously, market's always luck. If the dice roll in your favor a bunch of times in a row, you know, you get lucky when the dice rolls in your favor. You can only plan so far, and then you gotta like, okay, hopefully the market listens, right? Stock market, the premise, like we built all of our tools on this, you guys. Like the basis of everything we do here follows one simple rule. There's a foundation underneath all types of analysis, and this is very important. Let me write this down for my guy. That's my guy that does my videos. Okay. So there is a foundation underneath any type of analysis, and that foundation is what the analysis method is built off of. Underneath technical analysis, the foundation is past price action can forecast future price action. It doesn't explicitly say that, but that's exactly mathematically what it's saying. If I can use a line, an indicator that's using price, that's converted to a line or some kind of thing using a math equation, then what I'm saying is the history of that price is giving me an inference towards the future of that price because I'm using its history to make a decision. So the underlying foundation of technical analysis is the past can forecast the future to some degree. Fundamentals, the foundation is that the health of the company or the economy, micro and macroeconomic health of something can forecast its performance in the stock market. So both of those foundations are flawed. We both know that. Neither of those foundations work, with the exception of a healthier company likely will survive over time, which means it'll likely go up. But it doesn't mean that good earnings means that the stock's going to fly up through the roof. You beat earnings, it can fly up and trade off. The foundation we take here, or that I take here with liquidity maps, is the best foundation, is that the stock market is 100% random. You cannot predict it at all. Using price action to predict the future price action, to me, sounds ridiculous. I'm an engineer. You see this little piece of paper right here? Engineering degree. I graduated really high in my class. I was third in my class. I was also like, I love telling stories about school. I was like that nerdy kid with the skateboard. It has to make sense with me to the numbers. The idea that past price action of a stock market, which is just random Brownian motion, the ups and downs, it's just randomness. The fact that a past set of random data can forecast with accuracy future random data, it sounds, I'm not to knock your style, it sounds like a fucking moron would think that. Like, I look at that and I go, what? Drop a droplet of food coloring in water and watch it disperse randomly. This is what the stock market's doing. Now, there are parts of it that are somewhat predictable, but it's not price action. Price action with all the lines, shapes, colors, diamonds, triangles, emojis, things you can draw on your chart, it's completely a waste of time. It's no better than price itself. As a matter of fact, if you're to take every single moving average, one of my favorite lessons I love to teach is if you're to take every single technical indicator, I'm going to break down some math for you. If you take a set of data called price, okay, price is a set of data, and you do some kind of function of price. Function is a fancy word for equation. Example, if your function is 2x, then it's price times 2. Okay, so price times 2 makes another version of that. The function can be moving average. The function can be whatever. The function can be anything. If you do the sum of all functions you can possibly create to infinity, this is a fancy word for modification of price. A little calculus there, right? So if you take the stuff, right, this is fancy jargon for saying that this is candles. These are all your candle history of price, and you find every single, this is a fancy way of saying every possible function I can add to price. So every possible moving average, every possible Fibonacci, every possible whatever. If I take price and modify it to some degree, and I sum up all of my infinite number of technical indicators I can make. Remember, every time you make a technical indicator, let's use moving average for an example. Moving average will sort of like match the shape a little bit, but will be slow, right? You'll see price will like move like this, and price will sell off, and your moving average will like be delayed. Okay, so if every single time you create a function of price, it's got some kind of delay, and then you were to take the sum of all functions plus some kind of modification, that we'll call this delay removal, all right? You create some kind of magic fast Fourier transform or something, right? To remove noise in a set of oscillating data, whatever. Use some kind of math. Sum up all of your technical indicators plus some kind of function that removes the delay such that the delay that takes place from creating an average, an indicator or whatever, and you somehow have some magic number to remove delay. You know what the sum of all technical indicators plus magic number G that removes the delay ultimately makes your what does it become? This is by far the best lesson in technical analysis. If you take every possible indicator and then you take that indicator, remove the delay from it, you circle back around and ultimately end up at price. The net sum of all technical indicators plus the magic number that removes the delay, you just circle back and ultimately recreate price with this math equation. You modify price, then you modify it again, take the delay out, you end up at price. Technical analysis is the biggest chase your tail waste of time that creates some kind of, which basically tells you your best technical indicator is price itself. That's it. Which we say, what about price? It's random. Price is random. So at best, any technical indicator you make, and even if you have some kind of magic function to remove the delay from it, you end up back at the randomness you started at. Lawrence, is it a good time to play a bounce with the call? I do not enter reversal long trades with high IV. Short term, long term, nothing. I don't. When volatility is playing out like this, I don't reverse on calls. I'm gonna let today play out, and if I wanted to buy calls, I will buy it at the very last minute of the day, 5 minutes before close. Okay, wherever the market is, because likely we retrace some by the morning, and then I'll play it that way. So I never catch a falling knife buying a call in the middle of the day. At the end of the day only. That's my rule. Eunice, hey, what's up, dude? Thanks, man. So does everyone understand that if you sum up if you create a technical indicator, which is modifying price, and you remodify it to remove delay, you end up back at price, which is random to begin with. So what we do that's different here is we take the premise that price is random. We don't try to do all this razzmatazz to create some kind of modification of it. We just say price is random. So let's work with that. Our foundation is different than fundamentals and technicals. Fundamentals, again, says macro and microeconomics can predict the health of something, and therefore forecast its ability to perform in the stock market. It's true to some degree. It's not actionable at all. If the company releases great earnings, the market could fly up and sell off. The price action is based on the supply and demand of that thing. And that part is random and people will do. Technical analysis, 100% random. So if we start with the premise of those two things are saying that this foundation can predict performance in the market, we say you can't predict the performance of the market at all. It's random. So let's build a foundation off of that. So our techniques don't try to predict price action at all. But what is predictable is volume. Options will tell you volume. Very wildly will they. If I have bought 500 calls in SPY and SPY goes past 500. If I bought 500 calls in SPY for a week from now, I just told you that I want to buy 100. If I buy one call for 500 strikes, sorry. Then that telling you I want to buy 100 shares at 500 by next Friday. I literally told you all those pieces. I'm telling you what I want to do, when I want to do it, and how much I want to do it with. I gave you like a packet of information about my behavior. Hey guys, I bought 468 puts for Wednesday. I bought 200 of them, okay? So I'm telling you, I want to sell 20,000 shares of QQQ at 468 on Wednesday. So I've announced to you ahead of time my intent to want to sell to the market. Like, not only is it telling you what is, it's not trying to forecast behavior based on random noise. I announced my behavior. Here's a contract that I have a right to do this. Now, the fact that option is a right to do that means there's randomness. You don't know what I'm going to do. Hit my strike. Am I going to sell the shares? Am I going to take the profit on the option? Which one? You don't know. Part is random. What you do know is the people that sold those options to me are going to behave the same way every time. Every single time. They have to have that exposure in their pocket, or have to have this position in their pocket to mitigate their exposure. Delta hedging is a real thing. Options sellers will delta hedge to neutral. Options market makers will delta hedge to neutral because they make free money trading. By just providing liquidity, they get paid by the exchange. So why would they not be in every trade they can be against every trader like you and me and neutralize their bet through delta hedging? If they do that, they can remain neutral, get their maker-taker fees, but the delta hedging is 100% predictable. Just understanding Black Scholes. You know how the Greeks work. So, case in point, we create an algorithm that can find market makers delta hedging. Any time that you touch any one of my lines that I give you on this chart is predictable volume. Price action's random, volume is not. Doesn't mean that you can predict the price action at these points, but you know that I've isolated just a couple of points to take a look at. Anytime you touch hedge pressure, which is gamma maximum of market maker options sellers on weeklies, and this is monthlies. Anytime that you touch them, there's a volume spike. Anytime you touch them, there's a volume spike. This should tell you that I'm not bullshit. I'm telling you volume. I'd say volume's predictable. My ad on YouTube right now says we predict volume. We predict volume. We predict volume. That is one thing that you can predict almost 100% of the time. It doesn't mean you can predict the direction, but I know in this entire day of possibilities, I only care about what's going on there and what's going on there. My bets are off of those lines. Everything else in the middle is just noise. Why play the noise? Liquidity map shows you possible flow paths between A and B. There's flow path number 3 right here. There's the break and then the volatility that ensues on the break, flow path number 4. Okay. So the idea is that if you can understand that price action's random, then it doesn't matter. I'm just going to take a bet here and take a bet here. And the randomness, I'm either going to get it right or get it wrong, but I'm not like trying to buy the dip here to experience a whole lot of drawdown when I'm wrong. I'm going to buy the dip here and have fixed drawdown because I know that's where I want the pivot to be if I'm buying there. So I don't get caught up trading in the middle almost ever. I wait for my pivots and I take them. Anytime you touch hedge pressure, it is the gamma maximum of dealer-to-dealer options trades Gamma maximum is a fancy word for maximum order flow for delta hedging. So it just means a volume spike. Monthly volume spike, weekly volume spike. Whenever you get right up on it, volume starts to spike as you approach it. Easy as that. So when I know if I wanted the market to bounce here and it goes against me, I'm not just hoping all day that it turns around. I'm going to get out of the way because I know the possible flow path is to there. I don't want to hold this much drawdown when I'm wrong. So I use this as a guide for me to understand what my risk could possibly be. My point of no return if my long trade doesn't pan out, where I stop, where I enter, and that's it. And so I'm only entering where the flow path can be. And again, everyone, flow path, random? Yes, random. So you can have more or less confidence with other things we exploit, like arbitrage, DD ratio, resilience, or arbitrage indicators. If the index is tracking the sum of the stocks inside of it, then what the stocks are doing can give you a little head start on what the index can do. So I use these things to like strengthen these numbers up here to strengthen my confidence in the trade. So I'm taking a short bet or a long bet, doesn't matter. My confidence in that is if the arbitrage lines up. There's a little confluence there. And then I'll bet heavier if the confluence is there. My big trade on QQQ started off with a resilience play. QQQ was like trading up here, up here, up here, and resilience was negative. We know when resilience is negative, gap wants to fill. And so as QQQ was like trailing up, trailing up, trailing up, trailing up, I bought some near the money puts that expired like almost a week out, basically. Okay. I just wait. I don't bet anything other than I get my confluences there. We had monthly maps building some sense of resistance in the market over the next 2 weeks. And then we had an intraday signal that showed that the market was creating a bull trap. And my entry was perfect. My exit was perfect. Like I'm very happy with the trade because luck rolled the dice in my favor. Again, I don't sit there and say I'm a guru at the market. I'm not at all. But I'm good at planning. The numbers have to make sense. Something right there. I got right there. Numbers have to make sense. I know that it's random. My confidence was there. I took the trade. I got lucky. Lucky me. You always have to remember, it's just like poker. You're betting on certain things happen, but you're not just like randomly throwing your dice. I told myself I'm betting that volatility breaks out. We had illiquidity pockets on monthly maps, means volatility is going to break out. We're right close to triple B, so that can be a very devastating move to the downside. As a matter of fact, this was the trade itself. I have it right here. So as this day was happening and we bumped up against this guy right here, this yellow line, which is typically a resistance. It's another thing we talk about. This is an exploit of margin requirements. Again, more of a predictable thing. At the extent of this range, resilience was negative, so we're going to fill the gap. And I jumped in, bought my puts there, and that was worth 20K. The market was trading a highs on this retrace. I just jumped in on the short side, and then within hours, it started pivoting to the downside. Okay. So again, the things lined up, but nothing's 100%. But I got lucky, right? The dice rolled in my favor. I bet the traders were going to do something, and they did it. So as you're trading, you have to think of the same thing. The stock market is random. It is 100% random. But you can formulate really strong bets with really good confluence if you spend your time doing a little bit of homework. And once things line up, things line up. Today, right when the market fell out of DD bands, I was like, oh, we have a pretty good possibility for a little bit of selling pressure to create the volatility I want in the VIX. And as soon as VIX cleared triple B and we broke hedge pressure on VIX, the pieces started falling in play for a very sharp sudden move to the downside. This means VVIX goes up. That's predictable that the VVIX will go up. You know. So we talk about a lesson of this. I can predict that the VVIX will go up when you break through triple B on VIX futures. So you can't predict the stock market itself, but you can predict behaviors of certain things. Everybody here, type yes in chat if you remember when I say you break triple B. Does the VVIX predictably go up? Did I say that? Means the volatility of the VIX goes up. which means the stock market gets wider exponentially. It starts to curve faster. It starts to speed up. Everyone understand that? So we teach you a technique that can predict VVIX very accurately. I said VVIX goes up, and that happens. Okay, so that's check. So that's probability that a thin market could sell pretty quick today. Okay, good. So that piece lined up. And another thing is, okay, we have this guy right here. QQQ breaks a monthly gamma maximum, so we have a gamma exposure on dealers, and all of a sudden that can create additional volume. And here's the volume on the break. Here's the downside move. Volatility going up. VVIX going up. VIX which caused the VIX to continue to move, and the volatility of the VIX goes up. See the distance the VIX itself travels goes up, and the up and down moves. So VVIX goes up, VIX monthly hedge pressure break, QQQ monthly hedge pressure break, below DD band, everything lined up. Market just fell. And last week, I bet that all of that would happen this week. And now that it did, I took my prof and everyone else out on Wall Street is sitting there saying, what do I do next? And what I do now is I'm going to get off the stream until you guys sign up, and I'll tell you the rest of it. I'll tell you the Zoom call. We love you. What's Wall Street doing right now? Trying to figure out what they're going to do. What I'm doing is I took my money. I'm not really upset with $80,000 of profit in a week. Y'all stick around. I'll try to take it to, if I get the long trade right, I'll try to turn it to $1 million by the end of the year. Very rarely do you get markets pivot wider scale like this after a big market crash. Got about 2 months of the market trying to shimmy its way lower, I think. We turn around and start rallying into the election. Bet. Love you guys. See y'all later. Check out the link in chat. And everyone come to the Discord. Link in the bio. Love you. See you later.